Markets are concerned at the day's low. It's another weekday in trade, 70 points gone on the Nifty, and it is led by a couple of these names in the Nifty pack. We have these metal names which are not doing so well. So the metal index is down 2.5%, Midcap index too at the lows of the day, and across the board we are seeing some selling. Banks are marginally outperforming but still in the red. That one is down 0.1%, but overall it is another weekday for the markets. Market breadth also in favor of the declines. Well, you know, it's the first day of the March series. I actually forgot which month it is, but so fast, the time's slipping away so fast. But yes, March series, the first day, and it's not looking so good.
No, it's not, right? We're almost at the low point of the day. It's 17,450 on the Nifty. In fact, that level has also been taken out. And now all eyes will be on the 200-day moving average on the Nifty, which is 17,362. We're still about 80-90 points away from our 200-day moving average. Let's see whether we can hold on to it today and over the next couple of days. A person who might have some insights on where we are heading is Dharmesh Shah of ICICI Securities, and he joins in for a technical check on the markets. Dharmesh, what have you made of the grind down and your trading recommendations for today?
Yeah. So good afternoon, Reema. Definitely, I think so. The mood is very pessimistic right now in the market, and we see a selling pressure. This has been the 6th consecutive session where we have been picking the lower top, lower bottom formation. But what we believe, I think so, going forward, 17.3 and 53, which was a budget low, also 200-day moving average, and 17,200 again, 80% retracement of this rally from 16,800, 18,800. We believe, I think so, 17,200 remains to be the very strong support. We expect that to hold in this current corrective phase. One silver lining what we see in the market right now is that the market is entering into oversold territory after 6 consecutive trading sessions of sell lower top, lower bottom formation. So we believe, I think so, going short at the current level could be a bit of a risky, as we are nearing to a very crucial support of the range of 17,300, 200. So believe, I think so, the coming next week, we will see a technical bounce back. I am saying not a correct fall, which has seen from 18,000 to 17,200, 350 without any respite. We'll see a more of a technical pullback towards 17,600 to 700. But yes, currently the mood is down. So 17,200, 300, we expect to hold in this current corrective phase, and we would see a technical bounce from the oversold territory. As far as stocks are concerned, Rima, again, I would say that the power space has been doing very good in this current corrective phase, and we see a more of a relative outperformance in most of these power stocks. NTPC remains to be our top pick inside the power space, and where we have seen a stock has seen a breakout of a long decade consolidation, and that has panned out with a strong volume. So indicating again a structural turnaround happening in NTPC. Even if you look in the current corrective phase, I think so the NTPC remain to be the outperformer in this current corrective phase. So NTPC, we believe, I think so maybe once the market see a stabilization, we will see a technical pullback even in NTPC, where 190 to 192 is likely target, keeping a stop loss of 158. So among the all, I think so NTPC remains to be a top pick at the current levels.
Okay, Dharmesh, thank you so much. That's a technical check on the markets today for you. We'll slip into a short break now. On the other side, Shashank Agrawal, the director at Salasar Techno Engineering, will join in to discuss. You're still tuned into Midcap Radar on CNBC-TV18. Markets, they are still under some pressure, though there is a wee bit of recovery, but still 60 points lower on the Nifty, and the Bank Nifty continues at those levels of around 34 points lower at this point in time. As promised, let's get in the management of Salasar Techno Engineering. The company delivered a good third quarter and closed December with an order book of over 1,700 crore rupees. Note that in an interview to us in December, the management had said they expect inflow of around 300 crore rupees in terms of order flows in next 2 to 3 order wins, and are looking to take on more debt to fund newer projects. What's the update now? Shashank Agrawal, the director at Salasar Techno Engineering, is joining us now. Thanks a lot for joining us. Quarter 3 has been really good. Do you expect similar momentum, or have you seen similar momentum in quarter 4 as well? What is the current order book? What will you end the year with in terms of order book and order inflows?
Okay, well, I think Q4 is going to be slightly even better than Q3. And the order inflows are good. We have very good orders for manufacturing as well as for EPC also. And I think order book for end of the year should be more than 2,000 crores. We are expecting some more orders, which are in the final stages of, in fact, we are L1 there, but we're just waiting for the LOIs to be issued and the contracts to be signed.
What's the size of the L1 orders for which you are awaiting the LOA, letter of acceptance?
Close to 200 crores worth of orders are, to be signed off at the moment.
Okay, and so far in Q4, that's in the first 2 months, you won orders worth?
We won an order of about 140 crores
Yes.
for an overseas, the first overseas order, yeah.
So that was the only order, right? And you're awaiting 200 crore more worth of orders.
Yes, that's
Okay.
right.
We had spoken to you in December when you had won another order there, and you said including that one, around 2,000 crore rupees is the order book. Can you tell us what will you end the year with? You said more than 2,000 crore rupees, but considering the orders that you're expecting and the other orders as well, can you give us a ballpark? What kind of order book are you looking at?
Well, the order book would remain probably close to 2,000 crores plus minus, a couple of crores here and there. Yeah.
All right. And let's talk about your debt then, because you are looking at good demand across segments. There is an increase in order book as well. What is the current absolute debt? You had told us you plan to take on more debt to fund expansions. What would that peak debt level be? Have you taken some in quarter 4?
In quarter 4, we have been sanctioned some extra cash credit limits from our bankers, and we are utilizing those limits now. We have already started, we already taken part of that, and plus balance will be taken soon from our bankers. So probably end of March, we should be around 460 crores of debt. I would not say that's an absolute debt. There'll be non-fund based bank guarantee limits also. So about 260 crores of cash credit limits plus roughly around the same amount of bank guarantee limits, which is the non-fund based limits.
Any projects of yours, Mr. Agarwal, which is slow moving? Any clients which are a bit under stress? Any signs of slowdown that you would like to flag off?
No, to be honest, I think all the clients have, they're on full throttle probably, as I would mention it. Everyone is after us to complete the projects as soon as possible, and we get a good cooperation from all the project stakeholders to complete the projects in time and, give good progress. So as such, I don't see any constraint in terms of any order, any project getting delayed or, issue of any payments, stuck or anything.
Okay. What is the
Everything
receivable?
looks good at the moment.
What is the receivable timeline generally? In how much time do you receive your collections? And when you talk about execution timelines in different segments, what is the average time in which a project is completed?
Well, that depends from project to project.
Yeah.
The manufacturing cycle, manufacturing products have lesser cash cycle, up to 45 to 60 days. But the EPC projects have cash flow cycles of even up to 120 days. And, it's a mix of all. So we are currently probably at around 110 days of average cash flow cycle. The receivables are more than 300 crores at the moment.
Raw material prices have started moderating. Freight costs too are slightly lower. Now, when you bid for new projects, are you bidding them at lower pricing? Because you will be able to make that up in terms of lower, in terms of savings on raw materials, keeping your margins intact?
See, what happens is typically when you're bidding for government orders, they are on a price variation clause. So it doesn't really matter whether the prices are low or high at the moment. You bid, let's say you're bidding a project in February, probably you'll be bidding at a base of January 2023, and then project might get awarded to you sometime in September 2023. So there is a price variation clause. Suppose the project is awarded in 2023 September, so the prices would automatically go up or down depending upon how the prices move.
Okay.
So as such, I would not say that we are 100% insulated from the price movement of commodities, but yes, more or less we are close to 80%, 85%, we are insulated, yes.
Okay. Mr. Agrawal, I wanted to understand about exports as well. You do have some exposure there. Right time you had spoken about telecom towers and manufacturing being in the export order book. How are exports doing? Because that is a space where most of the companies have spoken about slower demand.
No, I mean, for us, I think we will be closing this year at the highest ever export orders. Our export sales this year would be close to 140 crores, as we speak. And this is the highest ever export growth, or even the volumes what we have done in terms of tonnage or the value in any of the given years. And even the next year, I see a good demand. We might even grow in our export sales next year as well.
Okay.
Just one final question. You're saying the clients are after you all to complete your projects. There are no signs of slowdown. What could you end FY24 with? This year, you're ending on a strong note. Can you give us some indication of FY24 growth?
So FY23, we should be in 4 figures, and FY24, we definitely looking at least 25% to 30% growth, on a year-on-year.
And QIP plans, anything finalized there?
It's on the annual. It's under discussion. We might, go for a QIP.
In the next financial year?
Maybe early next financial year.
Okay.
Yes.
All right. Thank you so much for joining us. That's the word coming in from Salasar Techno Engineering, looking at strong growth both in exports and domestic markets as well, and the stock has spiked to the day's high. With that, we'll sip into a break now. As we do that, we get you some interesting update from the corporate world. EY honored the Best in India Inc. at its annual Entrepreneurship of the Year Awards. Borosil Executive Chairman Pradeep Kheruka was named Entrepreneur of the Year in the manufacturing category. Here are some visuals from the event.
Welcome back. Let's get to our mid-cap spotlight segment. Sonia is here and she's going to be focusing on Electra Green Tech. The stock has been flashing green, and how? The bus maker has announced a technical partnership with Reliance. Sonia is here to tell us more. Sonia, hydrogen buses, what exactly is that? And tell us, of course, about this tie-up.
So, at the onset, I just want to say that although the stock is up 20% today, if you map the last 1 year, the stock has had a steep fall. So, it's down almost 40% from the highs that it saw in the last year in 2022. Now, as you rightly pointed out, the company has formed a technical partnership with Reliance, has announced the development of a hydrogen bus. Now, they're targeting the commercial launch of this bus within the next 1 year itself. It's a fully carbon-free alternative to traditional public transportation. And as we know, this whole green energy space is something that the government is focusing on in a big way. Now, Electra Green Tech is one of the pioneers in electric buses. In fact, the earnings of Electra Green Tech have been very strong. So if you look at it in the 9 months of FY23, right, the latest numbers, the bus division itself has seen their revenues rise 174% year on year at 689 crores. But for some reason, the stock has had a steep fall from its highs. So now perhaps with this, tie-up with Reliance, they can get into this space in a big way, and hence it's a revenue potential for them within the next 1 year itself, and hence the street is factoring that in.
Okay, all right. So that is about Electra Green Tech. The stock is up 20% in almost 20% in trade today. Sonia, thank you so much for all those details. But Sonia, Mahindra CIE is also buzzing in trade post earnings call. Tell us more.
Absolutely. This is one stock that has been a big performer in the last many years. In fact, it's at a fresh 52-week high today. It's up almost about 9% and now almost 13% higher. The management had a conference call last evening at around 4 p.m. and they were very bullish on the call. They expect that the outperformance that they've seen compared to the industry is something that could continue. Now, where do they get this confidence from? It's because their key clients, whether it's M&M, Maruti or even Tata Motors, all have new launches coming up and they have capacity expansion. So that's where the additional order book will come from for Mahindra CIE. Not just that, they've also talked about how their European business, which has finally seen some stability, will see at least a 10% growth in FY24. And over there as well, they speak about how they have new plants in both Hosur and Rajkot. That's in the process of getting operational. And on the operational performance, in Europe, because of the fall in energy costs, that's something that will aid their margins. So look at the power cost, right? In September of last year, the power cost was 400 megawatts per euro. Now that has fallen to 140 megawatts per euro. There's a steep fall there, and that will lead to a better margin performance for them. So on all fronts, actually, Mahindra CIE is sort of firing on all cylinders, hence the stock is up 13% today.
Thank you very much for that, Sonia. There has been a bit of a recovery in the markets. The low today was 17,423, and as we speak, we've just managed to climb above those lows in the last 10 minutes. There you have it. We're still down 39 points, but off from the day's low. ONGC has climbed up. It's managed to trim some of its losses. So ONGC from the day's low is up nearly 2.5%. So watch out for that. You can also see green on the screen when it comes to Power Grid. That's up nearly 0.5%. Coal India, Axis Bank. There was some news about Axis Bank and the closure of their deal. Axis Bank has now moved to the high point of the day, and that's up nearly 1%, nearly 1% gain on that. Midcaps is still flashing red and green. With that, we are out of time on Midcap Radar. Thank you for watching.